5 things you need to know about with Bitcoin's price action. Can we see 40K with the Santa's rally? And more importantly, is institutional money finally flowing into the industry? Today, time to discover crypto.
Capital flight is coming to the United States. The dollar is going to zero.
And that's what makes Bitcoin so special.
You have to have gone through a couple cycles to understand.
Once the price is able to clear this level, the breakout is on its way.
This is your indication to jump in now.
Welcome back, everybody. Happy Cyber Monday. Today, we got a full house. We have TJ. We have DZ.
Wait, TJ from Full House?
No, TJ, not quite from Full House, but we also have the CEO of Arculus, Adam Lowe. Welcome.
Thank you. Excited to be here.
Yeah, I'm super stoked. Today, we're going to be talking about self-sovereignty a little bit, the downfall of central banks, and someone that's actually developed the patents to help us break away. But guys, how was everybody's Thanksgiving? It's happy holidays. We are back. How we feeling? Markets are feeling good.
We're feeling good. We do have a full house here. And, we have a message for people who just don't want to self-custody. Cut it out.
Oh, wow. I'm
done for the day, everybody. Yeah. All right. That's all I got.
That's it. So we got, just look at the price chart today, guys. Bitcoin down a little bit below 37,000. So draw down a little bit, about 1.3%, $36,843. We have Ethereum still above 2,000. We have BNB up above 225 today. And for the top movers, it looks like out of the top 10, everything is a bit sideways. But when we go to the top 24 hours, guys, I was laughing so hard this morning. It's a bad day in the markets when a stable coin that isn't so stable is up 427% in the last 7 days. And that's going to be coming off of Terra Classic USDC. I actually haven't asked you, do any of you hold Luna? Were any of you a part of that?
No, we actually have Taco at NFT Alpha. Me and Justin convinced him to get out because it had depegged, and I think he had, he was saving it, and he was just trying to get that 20% yield or whatever. Next thing you know, his dollars were then worth, I think, 92 cents. Mm-hmm. It did a little bit of a climb to like 94, 95, and me and Justin were like, get out, get out, get out, get out of this coin. Next thing you know, it was worth less than a penny very, very shortly thereafter. So we felt pretty good about that one. We saved Tacos a little bit of savings there.
Yeah, who would have thought? Stable coins are supposed to stay stable. We have Uniswap now up a little bit, about 5%, up about $6.16. This makes complete sense. Still moving up off the bullish narrative because of the downfall of CZ from Binance. Obviously, there was an impact on Cake and their decentralized exchange. We kind of saw that flow directly over to Uniswap. Injective up here, 3% as well. Injective always leading those boards. We have Rollbit. It looks like people got a little too excited with Black Friday deals, and we're gambling a little bit of those savings away. Toncoin and Frax here for the top 10 here. Now, we got to do, as DZ always says, you got to cross your fingers, make sure none of our cryptos are in the negative side of this.
If you hit the like button, you reduce the odds that your coins are in here. Okay, I don't know how it works. It's just physics.
Yeah. That's what physics works.
Yeah.
But Python Network, guys, down 10.2%. Now, this was a huge mover last week. So this looks like, honestly, just a healthy retracement here. But this was the Oracle play that's backed by massive institutions. I mean, we talk about 75 different data providers like the SIBO, massive market data providers for this Oracle. So, seeing a bit of a backdraw there. Gas down 9% today. Blur finally seeing its first pullback. This was a heavy mover last week. Mina now down to 8.8%. And Tao's been on an absolute tear, but down 15% for those last 7 days.
Yeah, and that's not necessarily too uncommon what we see when you see a lot of things moving and pumping very quickly, and then the market starts to pull back just a touch. We get a little bit of a retrace there. So again, not completely unconventional to see some of those top movers pulling back. But what we are starting to see, obviously Bitcoin, a little bit of a pullback over the weekend on Sunday, but a lot of big open interest coming into the space, looking like a lot of big money is preparing to enter. We already know, the year end is coming up. We're looking for positive things on the macro level, spot Bitcoin and spot Ethereum ETFs around the corner. So not surprising to see big money moving and positioning and getting ready for what's to come in 2024 and 25.
Yeah, and just my opinion in chat said Pyth finding its base. And, this is something we've been actually looking for. So while Cyber Monday's prices weren't like 50% off, we've been looking for a retracement. I mean, it's been up only for like 6 weeks. We're going to be getting into it a little bit down the live stream today, but 6 weeks of straight green candles, which the last time that happened was like over a year or 2 years ago, and was really bullish for these markets moving into the bull run of 2021. So, we've kind of all been anticipating a retracement here, and we haven't gotten one since like Silicon Valley Bank, so to speak. So yeah, could very well be finding that base. I do want to point out, Pipe Guys is still brand new, hasn't been out for even 7 days. So this isn't that big of a retracement. I mean, 17% in a week for an altcoin is nothing in the grand scheme of things for crypto. Now, actually, before we hop into the Arculus here, because this is going to be a huge topic, or that's actually the first thing. Adam, how you doing? It's a pleasure to have you back. I know we've been on a show a few times together. What's Arculus been up to? You guys have some major updates that you guys have released these last few weeks.
What is Arculus, for those who don't know, too?
Sure. So, So I know we're amongst friends here, but let's back up. So Arculus is a cold storage wallet. So for those who don't know what cold storage is, it means it's self-custody, your keys, your crypto. And what we do is we take a card. So our parent company makes almost every metal payment card in the world. And we added elliptic curve tech. So it lets you keep your keys safe. So when, exchange X goes down, doesn't matter because your keys are safe in your pocket where they belong. Unlike other hardware wallets, it's so easy my mom can use it.
Well, and the key there is the keys are on the card, which is separate from the mobile device.
Exactly.
So if your mobile device was to get compromised, say a SIM swap or a variety of different things, your private keys aren't actually stored on the device. That's part of what makes it cold storage. It's stored separate from an internet connected device.
Absolutely.
So that's big.
Which means there's no backdoor, correct? So this is complete self-sovereignty. It's your keys, your crypto.
Yes.
And moving into, this is a really cool wallet. So for you guys that don't know in the audience, I've actually gotten the opportunity to work with Adam for quite a long time. We've been at the booths down in Bitcoin Miami. They have the coolest booth, by the way. If you ever go to an event, you have to stop by the Arculus booth. They're always doing giveaways. But with this card, a lot of people moving into, especially with everything that just happened, like CZ, what do they expect from those keys? They are directly your keys. There's no way anybody else can access them. It's your keys, your crypto. You kind of just shed some light on and maybe ease some of the audience that is just concerned with self-custody in general.
Sure. And I can appreciate that. Old systems, old hardware wallets, you practically needed a math degree to use.
Yeah.
And like by design, it's a minute to set up and seconds to use. So basically what your setup is, you're going to hit get started. They're going to give you 12 words in plain English. You write those down and keep those safe. That's your recovery phrase. And then after that, it feels like using any other hot wallet, except you have all the safety of a cold wallet. So the card inside has a secure chip that keeps your keys safe. And that's what allows all your crypto to move on chain. It's the same chip that's in the US passport with the same type of secure software that secures over 15 billion payment cards around the world that have never been hacked.
Yeah, that was one thing you mentioned earlier today that really blew my mind. I know you're probably not trying to toot your own horn too much here, but Adam, he was telling us he holds over 600 patents globally, personally, like things, technology and products that he's designed, he's implemented. Obviously a lot in the payment space and in the security space, which is two of the obviously very important things if you're trying to be self-sovereign and secure your crypto. Security obviously being very, very, very important. So the Arculus card, the team behind it, the product, the research, the technology is not new technology. This has been around a long time. This is something you guys have been doing for a long time. And I think you said you first came to Bitcoin back in like 2013. Is that correct?
Yeah, that's personally. And then the company came, later. But yeah, my crypto journey's been a while. I came out of defense and, I saw what sovereign entities could do to phones. And, since then we don't keep keys on phones, or I don't keep any important keys on a phone for a reason.
Right.
And keep it in your notes.
Yeah, exactly. Right. It's in my photos. No, it's really important to understand that. And, having that kind of literal sovereignty in your pocket is a great feeling. Some other wallets out there, if a government issues a subpoena, they will give them your keys. We physically by design don't have the ability to do that. Right? Your keys, your crypto, what you do with it's your business.
Which I would say as it should be, right? I mean, I think a lot of people were under that impression originally, like, hey, when I have a hardware wallet, I'm the only one with my keys. They didn't imagine that there was a recovery of it by the manufacturer. So that's important. It may seem like a small detail. That's a massive detail when it comes to security that you guys need to be aware of. And again, if you're on the self-sovereignty journey, taking full responsibility, taking full ownership of your coins and your keys is one of the most important.
Self-custody is real important. I just want to freak everybody out. I just learned over the weekend, and maybe you can speak to this. They have lightning chargers out there that look identical to a lightning charger, but the second you plug your phone into it, they can just steal all your information. A lot of people just think, my phone's secure, has to look at my face, and, it's got my thumbprint. No one could ever hack into it. There's ever increasing sophisticated attempts to hack into phones. Even Jeff Bezos can get his phone hacked. If Bezos can get hacked, your phone could get hacked. So these devices aren't as safe as everyone would like to believe. So cold storage definitely.
Yeah. Would there be like 3 tips you have on that? I'm actually curious because I know that don't ever plug your phone into a charger at an airport. Don't ever plug
public Wi-Fi. Probably huge. Public charging. Public huge. Should be a third one you can maybe think we should avoid.
Pick your favorite VPN. It just solves a lot of problems. So
Okay,
I use
VPN.
I use Proton personally. That's not a plug. I don't get paid for that, but I'm a big fan of VPN. Second is if you potentially could be a victim, contact your phone provider, have them put some steps in place so that it's harder to get SIM swapped. Because to your point, tons and tons of people get SIM swapped. Think of how many programs that are on your phone send you a 2FA through a text, which is garbage. You basically need to protect yourself from doing that. So use a VPN, use something like Google Authenticator for codes instead of a text message.
Yep.
And I saw somebody in chat ask a question about a YubiKey. We actually, for our business customers and our white label customers, also put YubiKey on a card. So similar, encrypted NFC, we can sign and log in. Some of our banking customers use Arculus for that.
400 patents?
600.
600. You sound like you have 600 patents, guys. I think the guy knows a little bit about cybersecurity. So yeah, I would defer to you when it comes to matters of this.
I have another security question. This might be a little bit on the lines of bad OPSEC for you to answer, but as far as storing private keys, we know they're stored separately on the card. Your private key backups. Do you have any tips for people? As far as buried in the backyard, put
like
in a safety
tattoo,
deposit
right?
box.
Like I'll show mine.
Right. I'm sure you won't tell us where yours are, but just like best practices when it comes to, we're trying to make this very easy. Your grandma can do it, your mom can do it, that sort of thing. And I do know the user experience process is very clean, very easy with the Arculus wallet. Once you've got those, 12, 14, 16, whatever the number of words you chose written down, where do you recommend people store that?
Sure. And this sounds a little old school, but I strongly recommend analog.
Okay.
So you'll see lots of people, you can encrypt it and put it in encrypted Google Drive. We've seen those hacked. Right. If you want to see how quickly you can hack a short password, go download Hashcat and see how quickly that can get cracked. So, I really strongly recommend analog. So there's a number of products out there that, you can etch it on metal or you can put it on this, you can put it on that. I'm not going to recommend one versus the other, but seriously, write it down on a physical device, put it in a vault. You have lots of capital, strongly think about a licensed custodian for that and split it across several custodians so that they don't have enough. At that point, it should be 24 words if you're going to do that. But the short message is fireproof in a safe place. Go analog. Sounds boring, but it really does work.
No,
best.
fireproof, that's a big one. I mean, I feel like a lot of people take that for granted, and there's somebody put out a simple test. I want to say it was LOP or somebody like that for just testing your own OPSEC, where it was basically like if something unforeseen were to happen to you immediately, could your next of kin, go locate your private seeds? Okay, if your house was to burn down and everything in it was torched and flamed to the ground, are you still safe? Like basically asking yourself 2 or 3 basic questions of if this happened, what would happen? If this happened, what would happen? And I think the next of kin one is pretty big. You need to make sure whoever is supposed to be taking custody of that in your passing actually knows how to do it, knows how to locate it. And like you said, if it's split between 2 or 3 different places, they know the procedure on how to.
Yeah, you don't want a situation. I hope I'm not speaking out of turn like Justin Williams has, where Justin Williams, he has a plan in place where his wife is going to, recover all his crypto, but his brother is going to be the one that has to help the wife. And he muttered to me one time, my brother's probably just going to steal it all. So you don't want to be in that position.
No.
Yeah, no, it's like the simplest way is the best way, honestly, when it comes to it. This actually, I watch a lot of intelligence breakings and what's happening in the Middle East and stuff. And honestly, some of the most complex systems, it's seriously as simple as being secure by putting it on a piece of paper, or in this case, putting on a metal card, which is what I do. I engrave it. You have a question here.
Yeah, Billy Crypto was asking, how do I move my crypto from an old Arculus to the new Arculus card?
Sure, that's super simple. So you get your new Arculus card, you say restore wallet, you tap in your 12 words, you should be ready to rock and roll in a minute.
Okay, and then the old card is basically
I mean, it'll still work. So what he's asking is some of our original card that came out a few years ago. We love our Edition Zero customers. Had maybe 80% of the market cap, and then we juiced up the crypto engine, added a supercharger, and so Arculus 2.0 now can sign for basically just about anything. So I think that's what he's talking about, going from old to new. And yeah, you drop in your 12 or 24, ready to rock and roll.
There you go.
Now, and I think the last question before we get into all the juice about the five reasons why markets are moving, guys, would be, there's a lot of concern that people have with hardware wallets and the updates. They're scared that that's where, like, if you ever update the card, but they don't want to update the card with it, that their keys are just obviously lost forever. So, like, there might be an update where you guys include like a backdoor or something like that. As one of the biggest questions I get in here, I know you guys have a solution to that. But ultimately, what does that look like for you guys? So if I have my crypto on that card and I never want to move it, but you guys implement an update I don't want to use, is my crypto stuck?
No, absolutely not. So by design, right, we've talked about this before. I love choice. We should always give consumers choice. So you can take those 12 or 24 words, and if you decide you don't like Arculus tomorrow, fine. Go pick your new favorite wallet, pop them in, move your crypto. So, you are not stuck with Arculus. It's, in my opinion, the best security tool in the market. But if you decide it's not, that's great. And, you can feel free to move it where you want.
And the same goes over time too, right? So a lot of people ask, especially when you're dealing with a hardware wallet or custody, hey, I'm going to lock this. I've got X amount of Bitcoin. I want to put it away for 20 years, for 50 years. What if, Arculus, isn't around, which I'm sure you guys will be around forever. You're a great company with a, great team. But, even if, the apocalypse hits, whatever the, crazy scenario you're imagining happens, no matter what happens when it comes to support for the product, those keys will always work. The coin will always transfer. The card, the technology that exists doesn't need ongoing support to continue operating, correct?
No, absolutely by design, right? We wanted it to be totally autonomous. Those are the same keys. It follows the standard for the chain. They're derived the right way, and it will always work. You don't need Arculus by design.
Perfect.
And so we got quite a few questions coming in from the chat on this one, which I completely understand too, guys. Which, by the way, smash one in the chat if you guys have a hardware wallet. If you don't yet, on Cyber Monday, we do have a deal with 20% off right now for Arculus wallets. Discover Crypto 20, correct? Or is it Discover 20?
Discover Crypto 20. That's today, actually. Cyber Monday, 20% off.
Exactly. So that'll be today. That link's in the bio, guys. But you guys need to make sure you guys get that self-sovereignty, that self-security. Get your crypto off exchanges. You guys see what happens with Binance, and you've seen everything that happens in the past. So, self-custody is the best custody. And to lead off with, that's actually kind of a good segue, but can you actually stake with the wallet, or do you guys like to stay away from staking just because that opens you up to other security issues?
Sure. So you can definitely stake with the wallet. We have a couple chains that you can stake right within the wallet. Those are chains that are kind of designed to be natively stakeable. Being in the US and being a publicly traded company, there's only so many things that we can directly support, but I would strongly say we work with Wallet Connect. So go to your favorite DEX, go to your favorite staking provider. It's 2 clicks and you're in, and then go stake there. So,
and those that don't know, Arculus has been around for decades, part of CompuSecure. It's a NASDAQ traded company. So, I mean, it's publicly traded, has a lot of, regulations on top of it. So you can definitely trade securely, buy secure.
Yeah, no, I was really impressed. I mean, we were just getting to know Adam a little bit this morning. He came in early for our content meeting, and I was really impressed with the stuff that you guys, you said you run a lot of nodes, Bitcoin nodes, a variety of different chains where you run in the nodes and, offering, like you said, staking on different products, buy, sell, for those of you guys that are looking for an easy on-ramp, they aggregate prices to where you're going to get the best buying rate for your, if you're buying Bitcoin or Ethereum or a variety of different coins, it will aggregate all of the different providers out there and give you the best possible price on the market at the time. That, so there's a lot of really cool features that, again, the more you guys get to use it, the more you'll see like, oh, wow, this is nothing's a one-stop shop in crypto because things are always moving and changing, but it's as close to an all-in-one solution for cold storage that I've come across yet. So very, very cool product.
For sure. And actually, I mean, we said like the all-in-one, but you guys now offer services for payments, correct? Like with Bitcoin, USDC, Shiba, through a new partnership with, I think, BitPay, correct?
Yeah, so we've used BitPay for a while, so you can certainly buy it with crypto. And then, anywhere that accepts BitPay, you can use it with Arculus. Some people have kind of pay with MetaMask, that works. If you want to do Solana Pay, that works. So we really have kind of tried to build in an engine to be your crypto Swiss Army knife. Even, like I said, if you like using MetaMask, Arculus can sign from MetaMask. So you get the MetaMask GUI, but the keys are in your pocket instead of your browser. So, we've really tried to make it as easy and useful and utilitarian for people as possible.
Yeah, no, I love that, especially coming off of the first article today, guys. Atomic Wallets, not Arculus, Atomic Wallets, just faced a lawsuit of over $100 million, the most recent crypto hack. So speaking of crypto hacks, guys, plaintiffs in a new class action suit against the hacked crypto wallet, Atomic Wallet, say the firm didn't share any information about the hack with clients and didn't report it to the police. That doesn't sound very cool. We are working on recovering the assets for our clients, and we will be filing a class action against Atomic Wallet. They didn't give our clients any information about the hack or go to the police or report it. I actually don't know if you've heard about this one yet, but guys, this is another non-custodial cryptocurrency wallet. They suffered a massive exploit in mid-June, which of course wasn't reported and affected 5,500 crypto accounts on this platform. So this just goes to the narrative again of just the uncertainty in the industry with people like, okay, can I trust exchanges? Can I trust a hardware wallet? Because this is obviously not the only wallet that has completely blindsided their customer base in the past here. I mean, what are your thoughts on this just in general with these wallets that aren't reporting? Is this a basis because obviously you guys are backed by CompuSecure, so you guys have to follow a lot more security measures and regulations and laws. Where's the imbalance here that is the reason we keep seeing this in wallets in the industry?
Yeah, I think it's tough. In the US, being a US company, we're so used to that standard of regulation, that standard of reporting. Other places, not so much. In private companies, you literally just don't have to report as much. So I think that's where you're seeing that. Atomic, to my knowledge, didn't disclose the mechanism, whether it's man in the middle or what the exact problem was. But I do remember it. I think the big thing there is, again, it's another thing of why your keys just shouldn't be on your phone.
Exactly. I mean, that's why I was harping on that. If you remove that factor, it removes probably a variety of the most commonly accessible weak points for getting to somebody's crypto is getting to it through their phone. Yeah,
we have XNA. This is coming from my man in the chat here. Does the wallet take XNA? Have you guys heard of XNA yet? So I actually don't know if the wallet, I use the wallet all the time, has XNA just yet, but they've actually worked very closely with the audience and listened to you guys, and they add about 6 cryptos every 6 weeks has seemed to be the pace with what you guys are bringing onto the platform. So how does that work with you guys? Are you guys listening to the community for what you guys adopt next into the wallet?
Yes. Yeah, absolutely. Yeah. So it's a combination of things. So one is we look at market cap. So obviously we want to be serving the largest percentage of the market cap. And then, we ask the community. So hit us at This Is Arculus, get on your favorite social platform, tell us what you want. The cryptography engine can sign for just about anything. And if we hear some interest, we add it. We try to bring some of the latest, most interesting things to the market. We were the first hardware wallet to directly give you an address for HBAR, as an example. Everywhere else, you have to go to Hashpack and do 50 other things. Here, you just fire it up, boom, you support HBAR. So
I noticed a lot of the main base chains, obviously Ethereum, a lot of ERC20s, Cardano, DOT. I noticed, do you guys have Atom Cosmos? I'm pretty sure you had. I saw Hashgraph, Osmosis, and tons of other things. But I realized, I was like, okay, you hit most of the base chains on, that people have, or, at least in the top 20, as well as all kinds of ERC20s and other ecosystem related projects. So it's going to have, for sending and receiving, a lot of functionality there, as well as buying and some of those sort of things as well. So yeah, it's a good product.
Thank you.
Yeah, no, I absolutely love it. That's actually where I moved my HBAR right away when that happened. So again, it's been like a year and a half now. Time flies by. Time flies by. Now my family has them and everything, and I actually pulled it out of the wallet because, guys, you can take this literally anywhere. It's the easiest thing to use. It takes 5 minutes to set up. Go for it.
No, and our market is pretty global. We did have somebody ask in the chat, you guys ship global? Are you guys worldwide or US, Canada, or anywhere? Or?
No, we ship globally. Depends on the exact country. Some of the global countries, it's easier to just ship from Amazon. So we'll end up shipping via Amazon, but that's not a big deal. The getarculus.com is for the US, and then a lot of the global markets are via Amazon. They're really good at shipping.
Yeah.
Yeah. No, but yeah, they're global now too, because I know we've shipped them out to Mexico, Canada, Australia. So they're everywhere, guys. They're everywhere at this point. Guys, we have F2 Pool come out, identified as first Bitcoin mining pool to filter transactions. It's been such a week with the censorship in the crypto community, but F2 guys here may have censored OFAC sanctioned transactions. A fundamental aspect of Bitcoin's appeal lies in the status as a form of currency resistant to censorship. and of course, immune to arbitrary relations. The principle that is that anyone with the means to cover network fees should be able to engage with transactions without requiring permission. However, a new report suggests that a major Bitcoin mining pool filtered transactions based on sanctions imposed by the U.S. Office of Foreign Assets Control, which is the OFAC here. Asian-based Bitcoin mining pool first to comply with the U.S. sanctions. So this just goes to show, guys, that the U.S. sanctions, everybody's been wanting regulations because they want to spot Bitcoin ETF. But you have to realize what this goes hand in hand with, because these institutions flow in and the money is coming in, which is bullish in a lot of ways and makes me, in fact, extremely bullish. We have to realize, while we're paying attention to the numbers and numbers go up, the regulators are going to come in and these institutions are going to lobby for the policies and sanctions and all these things that are implemented to not only benefit themselves, but to have control over that sector. And so seeing this with the sanctions just comes back and just shows these mining pools, people don't really understand how mining pools works at all. There's very, very few. It's a very, very centralized industry. We need to decentralize that more. And it's getting better, definitely. But this just goes to show that even the mempool providers, they're now looking to comply and freeze transactions a whole. And this honestly is not even talked about in this article, but makes me more worried about something known as mempool jockeying, because this means those transactions are 100% traceable. And if these centralized companies can pause those transactions, that means we have institutions that can also just look at the chain, look at the amount of volume coming in, and be like, you know what, we're going to spoof here, we're going to manipulate here. And that is what is known as mempool jockeying, where an institution or a big order will come in and see that a massive $1 million buy is on Bitcoin. But before the transaction gets approved, they pay the miner more money. So that way their transaction gets approved first and they short the market or they long the market. And this is where you get a lot of market manipulation. But man, I mean, it's just back to back sanctions here. And then now we're seeing, of course, the regulators approach exchanges, which I actually do have a question for you coming off this. Charles Hoskinson, which we'll talk about in another article too later on, but he just mentioned on his, it was a great, fantastic fireside chat. I love his fire chats where he just addresses the audience. But he was talking about his biggest worries moving into 2024. And of course, it was the US coming after exchanges, but then it was going to be the on-ramps and off-ramps. And then his next step said it was going to be the non-custodials or the hot wallets like MetaMask. So what's your guys' outlook on that, just moving into 2024 as people have self-sovereignty? They think something is decentralized. At the end of the day, these companies are just coming in back to back, abiding by U.S. sanctions and laws.
Yeah, I think it's tough. I'm not super worried about self-custody. US, I think it'll be a while to get there. I think people will figure out, like, even if they get associated with an address, it's seconds to spin up another one. So trying to censor that's really hard. I do worry about what you're talking about here and censoring Bitcoin transactions. That's really unsettling. It's another reason, if you can run your own mempool, if that's out of your space, totally get it, but then work with someone that you trust so that doesn't happen. I do think that on and off ramps is where you're going to see the huge clampdown. Yep. I understand why, but if you think you're going to be able to anonymously buy Bitcoin or ETH in an easy way, those days are gone, or mostly gone. So I think that's the biggest clampdown and where you're going to see that. But for now, I think self-sovereignty will still be a thing. And I think will be interesting as we see more chains adopt zero-knowledge proofs, where even your transactions can be anonymous. That is going to be very interesting times.
Yeah, no, it's definitely ahead for us. And what I wanted to point out here for the chat too, guys, is this is Asian-based Bitcoin mining pool. So it's not like this is a US-based mining pool that was looking at it. It is Foundry, which they do have a USA pool for their block specifically. But again, this just shows that US has an impact. People want to refuse. They like to, I guess, not admit that the US has such a strong point and stronghold over the global economy. Like they'll be like, well, it's happening in the US, but this is a global currency. So it doesn't matter what's taking place here. It's like, well, and in fact, very much does matter what's taking place here. That's what we saw with CZ and the takedown and the regulators, the SEC, the CFTC, and now even the DOJ all coming in and using regulation kind of by enforcement. And they're enforcing this on a global scale. So something to watch out for. But of course, even though it seems negative, there's a lot of bullish outcomes to this. You just, again, need to be aware of. It's not something to be scared of. It's something to be aware of so you can prep for that as we move into this next cycle. Looks like we have crypto slots. An ad popped up. So, win big, play big. Don't do that. Yeah. Don't do that. There. The only thing you should be playing on is the 20% off, guys, and liking the video down below.
Yeah, real quick, did want to answer XR Pete's question. He came in late. We did actually talk about this earlier in the stream, but he said, what, if any, benefits is there from changing from I assume is a ledger to Arculus? And I would say the first one that comes to my mind is what we talked about earlier. There is no stored seed phrase, so that Arculus cannot give up your seed phrase to the powers that be.
You know?
Yeah.
No back door here.
Yeah.
Right.
Nobody's coming in.
Right. Ledger through Ledger Recovery. If you guys don't know or don't remember, it was actually a big story. I want to say 6 months ago, or
It was
so.
right around the last Bitcoin, whenever the last Bitcoin was.
Yeah, last Bitcoin conference. That they offered a recovery service for your seed phrase, which means they did have a backup copy of your seed phrase or a backdoor or a way to access your device remotely to recover that those private keys. That was a big shock, I would say, to a lot of people that held ledgers and thought they were the only ones with access to their private keys. So in my mind, that's the number one. Now there's actually other reasons. I like the user interface a little bit better. I think it's simpler and cleaner to use, especially if it's somebody who's newer to crypto, getting them set up. Like if you've been around for a long time, you've probably created a lot of wallets, but if this is your first wallet setting up, I like the Arculus onboarding process better. But again, not having a backup seed phrase, to me, that should be plenty enough reason for anybody to switch from a ledger to an Arculus, in my opinion.
Hopefully,
So, yeah.
you think it would be enough, guys. Get it off the exchanges. But hey, speaking of just crypto price action and just the positivity around the crypto sector, there is a lot of bullish indicators right now coming from the man below us, the man of the hour, Kelly, down at BitLab. Dude, how you doing today? What are we seeing in the charts?
You know what? We're seeing some great things to be grateful for here. And I just want to shout out everybody that's here with us right now. Anybody that's been here for a while, or if this is your first time, welcome to Discover Crypto. And I hope all of you find some gratitude in your life outside of the charts, because that's what we do this for, right? Capital, to have a better life, to take care of our family, and to give to others. So that's what this channel is about, to provide those tools. So what are the things saying? I wanted to tie something in here for actually talking about self-custody, looking at this on-chain metric. This is just exchange net position change. We talked about it a little bit this morning on the BitLab stream, but this right here, this story right here is the compounding story of people understanding not your keys, not your crypto. What does this mean? This red metric is showing coins, the delta, the majority of coins coming off of exchange, and they're coming out in larger and larger quantities. This largest amount right here is following the FTX collapse. But of course, we know the 2022 year of all the collapses, the cascading collapses, in fact. Now, what we're seeing over where we're at right now, I want you to just imagine, just like you would do technical analysis on a price action chart, we see, look at how high this is, and we're getting lower highs all the way across, all the way to where we're at right now. So we are seeing this green metric, which means coins going on to exchange. Now, why would coins go on to exchange? Typically, you can assume, now it's not going to be an exact thing, exact science, but you can assume if people are moving coins from cold storage or private wallets onto exchange, they're likely preparing to sell, or at least making their liquidity available to be sold. And we can see each time this metric flips green, we see some pressure coming to the markets and a lack of bullish momentum or follow through once this turns green. Why? Because there's pressure there, liquidity to be sold. We're seeing this again right here, but does this mean this is the end of every bull moment? No, it does not mean that at all. In fact, if we look at this chart right here, these charts, by the way, this is a snapshot from the BitLab newsletter. By the way, you can get just by heading over to bitlabacademy.com, and there's a pop-up, sign up right there, dropping some incredible alpha. But this right here, as colorful as this is not meant to just be pretty. These are the different wallet sizes from less than 1 Bitcoin all the way up to 10,000 plus Bitcoin. And we can see with this metric, if it's dark red, it means either distribution or not accumulating at all. Blue means you are accumulating, buying, you're adding to your portfolio. And what's interesting about this is the area, the time frame in which we're at right now. Although we look like we're at a potential local high, every wallet size is accumulating. Now, this does cause me a little bit of concern, because in my mind's eye, this could also signal that max pain right now would be a move to the downside. Now, this is suggesting that we have a lot of bullish foundation being set. So my argument to this is, even with any move to the downside, I'm looking this as a structural positive for bullish momentum, because we can see in this chart down here, which we've shown a lot, the short-term holder cost basis has come up now. Basically, it's basically at the same level as the previous range highs. We got a lot of structure below us if we do break down. Now, I also mentioned today when Dr. Adam Lowe was over here on BitLab Academy, we were talking about the importance of following liquidity. A lot of people talk about the halving cycles. Ignore the halving cycles for a moment and just look at liquidity. Global liquidity is tied in with what's happening with the price action. We're coming up on, see these yellow arrows down at the bottom, have always marked the start of huge parabolic uptrends. Now, these happen to also be correlated to the halving. Does this mean Satoshi Nakamoto was just incredibly genius and him aligning the halving cycles with the global liquidity cycles? There's no way to know, but this is just another element, another signal that's suggesting we are in for a doozy of a bull market when it does come. Now, I do want to mention on the weekly charts, we had, I think, green weekly candles. Now, these green lines right here, 3 times that this has happened, where we've had 6 green weekly candles in a row. And this here in February 19, this marked an absolute rocket ship up afterwards. We've also seen the V-shaped recovery here that went into a little bit of consolidation. The halving was essentially right about right here. And then we got another 6 green weekly candles. Does this mean at 6 green weekly candles it's going to rocket ship? Not necessarily, but it does show the historical significance of how rare that does happen. I do want to point out on these 6 green weekly candles, these white candles are on my chart, these bullish candles. Stochastics are getting relatively high. So this would also signal that, the candles themselves, which we talk about in BitLab Academy, the candles themselves, story of weakening momentum. Expansion here. We got a spinning top followed by a doji candle. These 3 candles are suggesting a likely pullback of some sort. Will this be representative of all it is? I do think that we're still high likelihood of, at minimum, even if it's just a wick on a weekly basis, coming down to this 35.2. If we do, so I'm looking for 31.6. Now, if we're looking at this on a smaller time frame, for instance, actually, come back over the weekly.
And then, of course, Kelly would be healthy, right? You're looking at, yeah.
The most healthy thing that we could do right now, the most healthy thing to do, sort of bullish structure, rise, retrace, continuation. Going like this means the price is going to go straight back down like this. So people that may think this is bearish to say we could have a pullback, that's them not understanding how struck and bullish structures and markets work. And in all actuality, this would mean if this does come back, this is all opportunity. This is the opportunity zone. If it's back based on other metrics that we look at here, we do a bit of steady of volume. Looking on the daily, more significant. We're seeing a bit of a decrease in volume, especially in this last week and a half or so. So a move is brewing. We have the levels marked out. Talked about it a lot in the BitLab Discord, as well as in on the BitLab YouTube stream, as well as here on Discover Crypto. We're trying to keep you guys informed. And by the way, it is Cyber Monday, and we do have a huge discount going on. And I'm going to post a comment here in the chat if you guys want to pin that. There's basically a 50% off for 3 months going on right now. 3450 is the code. But also, if you come here on that link that I just shared in the charts, you can, in the live chat, if you retweet this tweet, we're going to be drawing this week. 3 members get lifetime access for free. Just for anybody who wants to sign up and learn how to read that price action, learn how to read those signals, get involved with us over at BitLab. Join us in the Discord. You can use that code again. 3 for 50 is the code to get 50% off for 3 months. But that's all I got right now. Market structure is looking very bullish. Any pullback from here is an opportunity. And remember, get Arculus. Secure your future. What the hell is the point of making all these profits if they end up getting taken from you because you're irresponsible?
That's the best way to go with it. Appreciate you, Kelly, as always. Yeah, Chad, we saw it a little bit. It was clipped a little bit, but we will get that all fixed and ready to go. Still, the takeaway, guys, markets, we're anticipating maybe a little bit here of a pullback or retracement. You got to remember that if you're new to these markets, the other thing I wanted to point out from that chart where he was showing that, the self-custody, when people flood out of that through the FTX, when you see people not flooding into it, that's also a large indicator that you have a lot of new retail volume and new buyers entering the market that aren't super aware of self-custody as well. So a lot of these indicators are showing us that we're going to move into this Santa's rally, having those 6 week of green candlesticks. Yes, a retracement is still very much needed, But DZ, I know we got 5 things that we need to watch in Bitcoin this week. And if you don't watch these 5 things, what is going to happen to us?
5 reasons, everybody. And if you don't listen to it, well, you're just going to be a no coiner, right? You're just going to be poor. You know, your nephew that you told to buy crypto is going to outtrade you on a meme coin, and then you're just going to feel bad. But let's look at 5. You know, Kelly kind of touched on a couple of these, but 5 things to know about Bitcoin this week. We're going to roll into the first one here. Monthly close looms with Bitcoin price up in less than 10%. So we're seeing a little bit of a momentum shift, I think would be the best way to, look at this. And it's not a huge shift. You know, we're looking at, I think it's around 8% right now. If we had a 30-40% monthly, expect a little bit of a coolback. Now that it's only around 8%, maybe this is momentum that can keep going. So keep an eye out on the momentum. Going to continue here. Here's just the monthly chart. You know, we've kind of looked at this. November, 8%. This is not a good metric, everybody. Do not pay attention to this, but I'm going to create a bullish scenario anyways. The last time we had a single-digit green candle, 5% for the month, we ended up having a 31% December. I'm not saying we're going to have a 31% December, but, last time we had single digit, it was pretty positive. So keep an eye out. Reason number 2, everybody. Reason number 2, and maybe Josh might have a little takeaway on this. Yeah. Key Fed inflation markers lead macro catalysts. We got Jerome Powell speaking on the 1st. That is this Friday, correct?
I believe so, yeah.
Yeah, so he's speaking Friday following comments from senior Fed officials throughout the week. Now, the prediction market's got it in. There's going to be no rate change. Well, are we looking for anything else from the Jerome Powell speech?
Yeah, I think we actually have the perfect person to talk about this as the CPO, Chief Product Officer over here. It's really going to come down to consumer spending. So, like, are consumers still spending? Are they still maxing out the credit cards? Are they starting to default on their debts? And from what I can tell on the numbers right now, there is still a good majority of spending despite not having any personal savings in America at this point. So, what have you seen as, just from an Arculus perspective? You said still getting that consumption. You guys still seeing that consumer spending. What's your guys' outlook with just the inflation cycle we're in?
Sure. So we look at, a lot of our partners, they publicize their acquisition data, right? So on the payment side of the business, our cards we produce for them depends largely on acquisition. And acquisition is still strong in the banking sector. Over the holiday spend, you saw record buy now, pay later kind of numbers.
Oh dear.
So, that consumer spend is still strong. So that's in the U.S. cycle. Obviously, there's the Chinese economy pulling way back due to the real estate issues they're having there. So if you look globally, I think some tenuousness, but overall still a lot of dry powder in the U.S. and generally positive sentiment.
Yeah,
I was just going to ask, how systemic do you feel? Like you mentioned the Chinese real estate, pullback or some of the issues that they're having over there. How systemic do you feel like that really is? Is that going to be something we're going to be seeing continue over the next 2, 4, 5, 10 years? Or do you think that's something they're going to be able to adjust in short order?
Yeah, I think it's tough because you never know the news coming out of there exactly how accurate it is.
Right.
But I think they have so much control that they can adjust a good bit for it. It really depends on their capital markets and capital reserves. There have been a lot of news articles recently about a drop in percentage of global economy. I'd actually, from their perspective, worry about that more than the real estate, which they can kind of, essentially centralized and adjust on the balance sheet. I'd worry more about reduction in export, which I think is what they are worried about.
Yeah,
right?
And you've seen the stimulus injected into their economy. So they kind of do the same thing the United States does, where they just kick the can down the road. They're just going to continue to borrow and continue to, adjust whatever mortgage rates or whatever they need to increase lending or increase spending out there. But it's been on a teeter-totter. I think we just had another massive bank fail in China as well. So, it's happening. There's this cascade. And it's very weird because in 2008, if this was happening, the market sentiment is completely different because we've had multiple bank failures still since Silicon Valley. There's still a lot of retail banks that are struggling. There's like 700 or something on the watch list for that are on the precipice of jumping off this cliff here that are going to just be consumed by the big four. No one's necessarily talking about that just because we keep stimulating the economy with artificially printed money.
Well, that right there, the difference between institutional and retail, I feel like is the big difference we're experiencing right now. Because yes, retail is still spending. But yes, they also are maxing out their credit cards, right? They don't have any savings. They are in over-leveraged debt in many scenarios, whereas institutions have been sitting on a lot of cash. I'm looking at a number right here. We don't have it to pull up on the screen, but money market funds have hit a record $5.73 trillion, increasing by $1 trillion just since the start of this year. So in 1 year, 2023, we got money market funds sitting with a $1 trillion increase. So there's all this money, I would say, waiting in the wings to get into, they're whether you call it the flight to quality with Bitcoin being an asset, like people are looking for things other than treasuries, other than money market funds. Like that's just cash waiting to be deployed. And I feel like a lot of people are looking at 2024 as the year to start taking those actions. And we're starting to see big money movements from kind of legacy players in the financial space that have been around for quite some time, much before Bitcoin, and they've been playing these money market games for since the beginning of really modern finance. And I think that money getting into this market is really where we're going to see the explosion into 2024, 2025. And I think we'll see a more dovish Fed as we get into 2024. More for necessity and just the reality of the situation that we're in. That's just my take.
Yeah, you're bringing up a good point with the consumer spending, and then you have big business on one side. Well, consumers, they are maxing out their credit cards, and not only that, the credit cards are getting higher and higher interest rates. Well, we actually have a few key indicators on some consumer spending we're going to be looking at this week. On today, we have new home sales data that's going to come out. Oops, let me go ahead and click here again. Consumer confidence data. That's going to be an interesting one because, after Cyber Monday, people going out on Black Friday, were there crowds, were there not crowds? Also, Q3 GDP data, PCE inflation, and then we have Jerome Powell speaking on Friday. So that is number 2. Again, number 1, we got momentum shifting. Number 2, we have the key inflation markers with the speech on Friday. Number 3, we have Grayscale Bitcoin Trust eyeing Bitcoin price parity. So as more and more, I would say, savvy investors are looking at an approval. And so they're getting out, they're taking their profits. A lot of these people got in at a 40% discount, and now the discount is single digits. Kathy Woods and others taking profits on that. So expect more and more signs that we're seeing this ETF approved. Number 4, and maybe talk to Mr. Arculus over here. Bitcoin hash rate passes 500 exahash watershed. This is starting to look a little bit parabolic. Now, is this just going to be, will this chart always look like this because of Moore's Law?
You go for it, yeah.
No, I don't think so. I mean, the thing that you have to remember too, right? Moore's Law isn't impeded by cost of capital, cost of infrastructure, etc.
Good point. Right? So yeah, it's not just, hashing rate goes up because the chip's better.
Yeah, exactly. So, and at some point, it while it technically can go up, I think it will get capped just by market demand, right? So I do think it won't stay parabolic certainly forever, especially if regulatory, like you talked about, infringes on that.
Yeah, right. I think it could be impacted by if we start negating that with the negative energy, but to his point with there's going to be this market level. I have no idea where that is at though, so it could still go. It can go twice as high, 3 times
I know
as high.
It sounds like a bunch of Martian speak. The exahash is at a record high, everybody. Are you excited?
Yeah.
Most of you are probably saying, I don't know what the heck that means. Just tell me what it means in normal English. Well, I think this sentence kind of sets it up. Miners, this is just kind of underscoring, this is just showing miners' conviction to future profitability. Okay, it's never been more expensive to mine this Bitcoin. And they say, I don't care. I am that certain that it will be profitable to mine it, even if maybe I have high electricity costs and I'm mining at a loss. People are still betting on Bitcoin there. All right, was that number 3? That was number 4, and then number 5 here. Kelly talked about this. Bitcoin exchange balances resuming the downtrend right now on the short year, but in line with the broader trend in place for 5 years, exchange stocks of Bitcoin are drifting ever lower. And at a certain point, that there's the aforementioned, we haven't really seen it, supply shock, the supply squeeze for the exchange magically run out of Bitcoin. What are the odds that ever happens?
I think it's pretty low. I mean, you would have to see huge ETF demand to see real supply squeeze. It's pretty liquid. The largest 5 market makers talk to each other regularly. They have OTC desks. The market's a little more liquid than we think it is. I think the interesting part would be actually there's points in time, they need to coordinate any sort of huge demand because, right, it's not Polygon, right? That's not a 3-second block. It takes a minute for that Bitcoin to move. So I think that's the thing people sometimes forget about is not instant.
Yeah, and it's what we saw with the article earlier with the centralization of these mempools, like you said with these market makers, they know all the transactions and the volume coming in. So if a big player is going to enter the space, they kind of all are within the same realm and category and group, and they all talk to each other. So, I think it just falls under the bears narrative of they're like, oh, there's no volume in the market. And you're like, well, there is less supply. We have all this adoption. At the end of the day, it's still a very liquid market behind the scenes. So, this is where we keep getting that price action up. Might see some short squeezes. The only thing I see on exchanges is I think Binance at one point, it's cost like 400 Bitcoin to move the price action. If you spot buy and spot sold, it moved the price of Bitcoin by like 1%. So that's where you might see just some manipulation. But everything's been bullish since. And was there another one? Was that number 5? Because
that was number 5.
This guy's face is funny, dude. This is the exact bull face that you need to have on the market right here.
Not on the article, was it?
Yeah,
he's ready to go. Right there.
Yeah, that guy right there. That is the Bitcoin and profit. Yeah, we got 84% of Bitcoin and profit. So this is 84% of hodlers right now. 84%. You don't want to see the 16%. That's that was all of us most of last year. Let's move on a little bit here. I do want to share this. Public funds, we're saying the market's more liquid than you might think. Public funds aped in 326 million into Bitcoin last week. But then you look at alts. I'm getting scared. I want to sell my alts when I see that. Alts only got 4 million, scarcely like 1.2% of the money there.
And you're going to see that, I would say, consistently throughout this cycle, right through the next couple of years, especially leading into the Bitcoin halving. You're going to continue to see a lot of inflows into Bitcoin. Like I said, a lot of the money on the sidelines is smart money, institutional money. It's less retail than what we've experienced the last few cycles. We're not saying we won't get that retail cycle. We will see it happen, but that's probably more for 2025 than it is for 24. We're seeing spot Bitcoin, spot Ethereum ETFs. A large portion of that money is going to flow into those two market caps. Obviously, as those market caps go up, we'll see altcoins flourish with new money coming into the system, because as you know, it starts with Bitcoin, moves to Ethereum, and then moves down into the other alts, and goes vice versa. And I think part of what we're seeing with this little bit of a pullback now, we may get into the stories, we may not, has to do with what we're seeing with a lot of those institutions that were early, that got in with the CME discount at minus 40%, with maybe the Cathie Woods and the MicroStrategies and some of those parties de-risking just a little bit, taking a little bit of profit off the table. If they were buying through all of last year, they're in some pretty good profits right now, looking to reset a little bit and move into the 2024 market, especially right here in December at the end of the year. It's just a logical position reset kind of zone to be in. So that's where I would say be careful on these pullbacks. Don't panic. We're going to see, like as Kelly mentioned, we're going to see some different volatility. We're going to go back and have some healthy retraces to kind of set support at some of these levels. And I would just say temper your emotions both directions as time goes on. Both as the prices are going up, don't FOMO and feel like you've missed it all forever. And as prices are pulling back, don't panic sell and feel like, oh man, I need to get out of these things. It's going back to zero. It's not going back to zero, and it's also not going to 300K overnight. It's going to be a journey, as you've heard me mention. There's going to be pumps and pullbacks. So you want to stick to your plan, stick to your emotions. And this is where, again, it's good to have your long storage bag, your long holds that's separate away. That's one of the best ways to practice not over trading is separate it, make it more difficult for yourself to access some of those funds. Have your funds that you're using and moving around all the time for different coins and trying to speculate with, and then have just your long-term holds off somewhere secure. Again, for me, that's the best way to do it. Because it helps take some of that emotion out of it, because it is a very emotional roller coaster when money's tied into this stuff. And it's going up and down so dramatically. There's a lot of positive things that are going to be coming out. But again, pace yourself. 2024 is going to be a long year, and 2025 that's when a lot of the fun is.
For the emotional side, some fundamentals for you guys would be the actual deadlines for ETFs. There's a lot of anticipation and FOMO from the Cointelegraph article, obviously, that caused a lot of this rally. But the deadlines are what matter, guys. The one thing you can trust the government to do is just be as slow as possible. They're going to wait and procrastinate more than anybody. If you want to be in the government, the best workers for the government are the people that procrastinated all through high school and middle school. Like, you're that person, waited last day, that's what we're looking for. So, the tickers here, the next one up, guys, is January 10th of 2024, and that is going to be ARK Investments Bitcoin ETF. That's their deadline for their approval. Now, notice that's green and that's boxed up. The Cathie Wood, unfortunately, I feel like it's beaten down a lot of these markets. I'm not expecting that one to actually get approved. There could be a million different reasons why they decide to just not go through it. The one that you really want to pay attention to isn't until May. So you have the third deadline from BlackRock's ETF on the 15th of January. But as you can see, these always get read out, guys. The Gary Gensler and the SEC just say, oh, we'll postpone. The approval could very well not be all the way until March of the 15th of 2024. And even you got a bunch of deadlines all the way up until May. And again, anything can happen. We could see them take it to Congress and just be, we're just going to deny it, and not Congress, but take it to court. You want to watch these dates. So we still have multiple months between now and the emotional wave of, is this bullish up only? Is this spot ETF getting passed tomorrow? It very well is more than likely that we won't even see that ETF pass until Q2 roughly of next year. You got another one off that?
Well, before we jump off exchanges, I kind of want to get your take on this new exchange that we've seen. Former New York Stock Exchange president, I would say, there's pretty good credentials. Money will flood into crypto industry with spot Bitcoin ETFs. Well, then you do a little bit of research. You're like, oh, well, he's the CEO of his own exchange. So he's the CEO of the crypto exchange Bullish. So one, the name's Bullish. That's a sign right there. A CEO of a crypto exchange is bullish on crypto. Imagine that. I know it's so crazy. So when I hear someone like that saying, well, money's flooding in, I take it with a grain of salt. But what gets me excited is seeing who's invested in this exchange. Haven't really heard of it before the other week. It was launched just in 2021, but it's backed by Peter Thiel and Mike Novogratz, and as well as an investment bank as well. And also, they're the ones that just purchased CoinDesk in an all-cash deal. What are your thoughts of this Peter Thiel-backed exchange? Just bought one of the largest crypto media companies out there. Is this one to keep an eye out on for the next year or two?
Yeah, I think so. I mean, I think the most interesting thing was really looking at the buying of CoinDesk. I mean, exchanges. I don't want to say
that's a Bezos move.
Yeah,
you buy a media outlet to kind of control the narrative.
Yeah, I thought that was really interesting. I knew a couple of reporters over there, so I've got an email into them to see what the deal is. But I think that it's intelligent, right? If you can help control the narrative, you can help push your agenda. So I think it'll be an interesting one to watch. It really depends on their strategy, right? I would not want to enter into the retail market right now. It's just really hard to compete from decompression like any other exchange. So it'll be interesting to see if they're looking at more professional traders, institutional traders, and see what their overall strategy is. But they have a fun booth at Bitcoin. If you guys go, right, you can go ride the mechanical bull.
Yeah, that is fun. Speaking of competition for retail when it comes to exchanges and fees and stuff, do you think we will trend down to 0% fees at some point for users? Like what we see in traditional markets, a lot more for retail.
Like a loss leader, I guess.
Yeah, you're using it for data and information, and customers not as much for making fees on every trade.
Yeah, I think it depends a little bit on regulation, and I think it'll get compressed. I don't know if we'll get to zero. I think a lot of people on equities, right, don't realize that their equities get lent out for shorts all the time, and that's how banks make money versus some of the fees. You can't really do that with crypto, at least if you're doing it right. So I think that's one thing. And then crypto just has more infrastructure needs than traditional equities. So I think it'll get compressed very significantly. I don't think it'll get compressed anytime soon as much as equities.
Gotcha. So enough demand there and time for the markets. That makes sense.
Yeah, now we have Bitcoin approaching the bullish Harbinger Euphoria period. So get a little bit of hopium, put on those gas masks, guys. We're about to take some of that hopium right now. What does this mean for our markets, guys? Is this part of that Santa's rally? And according to a recent report by Glassnode, the profitable supply of Bitcoin has reached levels seen when the market just had pulled back from its all-time highs in November 2021. So this actually goes back to the article of the guy sitting in the money pit, all bullish and in general. What are your thoughts on this, kind of just moving with the supply and Bitcoin and holders? Are you guys worried about necessarily a pullback coming because we're all in profit, or does this have to do with the fact that central banks and people are just done with?
I'm glad you brought that. Can I share my screen real quick? Because we keep talking about 6 monthly candles, 6 monthly candles. Last time we saw it, woo, off to the races, everybody. Well, if you go by the 4-year cycle, we're actually January 2020 is where we're at in the 4-year cycle. And if you go to January 2020, I haven't seen anyone talking about this or anything. So another DZ original. So that means probably wrong. This is pretty close to 6 green monthly candles. Weekly. 1, 2. That one's kind of a fluke. 3, 4, 5. And then again, that closed slightly lower than that high right there. But again, tell me that, if you painted those green, you barely be able to tell. So after, in the 4-year cycle, when we had a 6-week bullish period, massive drawdown. If I can measure it real quick.
DZ? Yeah. Is that what you're doing right now? We're about to go into lockdown.
Wow, look at that, folks. 60% drawdown. Okay, that was a 60%. It's actually a little bit higher than that if you move. So over a 60% drawdown. Now, this isn't 6 green weekly candles, but it certainly looks like it, and it was right in with our 4-year cycle. So just beware. People are saying 6 green means off to the races. It could also mean 60% pullback if you kind of squint your eyes. I just do that because I have bad eyesight.
Well, on the bullish narrative, gold guys just hit $2,013.
Sell your Bitcoin, buy gold. It's over.
Buying the gold, store value, flight to quality, sets a 6-month high as the US dollar retraces. And this is obviously, as we've just seen, high inflation numbers and the Feds continue to tighten. This kind of approach is the super cycle that a lot of people talked about, where Bitcoin is traded as a commodity actually since that direct day where we saw that 2020 pullback. Bitcoin started following copper, oil, and your commodities in terms of price action. Of course, the charts were more volatile, but it did start following that commodity-based trade, which is why the SEC and the CFTC have oftentimes referred to it as a commodity. They say it trades as one a lot. And so seeing gold edge higher just shows that, with the conflicts rising in the Middle East, the Indo-Pacific, as well as still in Ukraine, and just the worries of both China's economy and the U.S., people do want to store their wealth and store that value away from that government. They want to focus on that self-sovereignty. So this does show, and I actually do believe there's a lot higher correlation than people want to make it, but with the Bitcoin miners and gold as a commodity versus the rest of the market that might start being attracted by the commodities, just the commodities-based market, it's going to trade very similar. So this is bullish. If we're seeing that flight to quality, that flight to store value, and that breakaway, this could still continue on into the new year. And I do think, honestly, just with we see the anticipation. It feels like conflicts are rising more and more. We see the debt spiraling more and more. We have to now pay off $1 trillion plus annually just in debt interest alone in the United States. This is the way we're progressing. And so, for me, this is very bullish long-term, so to speak, maybe not so much in the short term.
Yeah, to me, though, it's a lot of the macro that's really starting to round out bullish. Kind of like I said, we've seen retail-driven markets in the past. I think we're going to see macro-driven markets here with the stable coin game. It sounds kind of weird to talk about stable coins being super bullish because they're stable coins, right? But new money into the ecosystem is what we're experiencing with stable coins around the world. Before it was just Tether. We saw the stablecoin wars really take off in, I'd say, early 2020 when USDC and Circle really started. They were around, but they really started to make inroads as far as you could see USDC's market cap and Tether's market cap almost cross like this as Tether was going down and USDC was going up. Circle, I believe, I don't know if it was announced today, they were doing some things with stablecoins in Japan. They've obviously announced their EU stablecoin not that long ago. And so seeing a lot of the institution, the traditional money getting into the crypto space through players like Circle, which is, again, I say when you think Circle, think Goldman Sachs, think BNY Mellon, think the oldest bank in the United States. Again, old money, people that know how these markets work. They are creating demand for the dollar that didn't previously exist globally. Like obviously the dollar #1 for trade all around the world. Now this is a new market. If you're thinking like a big business that's trying to grow your market share, what's the best way to grow the market share is to get your product into the hands of new users at the lowest barrier of entry possible. There's a much easier way to get dollars in the hands of people today than there was 2 years ago, 4 years ago, 6 years ago. And I really think that's what we're going to experience in 2024 and 2025. I know you guys have had some, you were actually just in Singapore with some of the Circle meetings and some of that sort of stuff. How do you, payments, you've been around in the payments game for a long time. Do you think I'm off base there, or would you agree with stablecoins being one of the key components to getting us this market to the kind of next level of maturation?
Yeah, absolutely. It sounds kind of boring, but it's just so important, right? If you think globally, everything trades, like you said, through the dollar, and we need to maximize liquidity. So the dollar is a product. We want to increase its utility. We want to increase its ease of use. So we do that through stable coins, and you got to do it in a regulated and trusted way. And Circle and USDC are probably the best example of that. And they're working really hard. Right now, we're still in USDC's on this chain or that chain. They're trying to make it seamless so that digital cash just pushes around the world at low cost instantly.
Yep.
And that brings up huge value. So whether you're working in dollars or crypto, or if you're looking at, institutions like Chase working on Onyx, right? So they're partnering with Provenance via Acceler Bridge into Onyx, and then bridging over to AV. So, the interoperability and the flow of liquidity and capital is huge. And although you don't see it directly, that increased liquidity brings value to your Bitcoin, right?
Absolutely.
Because your Bitcoin can off ramp into USDC. You can hit your favorite DEX. You can hit your favorite cross chain DEX, which I talk about a lot because it's so important.
Mhm.
You know, we're gonna
Do you have a favorite?
cross chain DEX.
Yeah.
I guess I'm pretty old school. You know, Uniswap has some great stuff. Because I'm a crypto nerd, you often hit the wormhole contracts directly and just invoke the methods.
Yeah.
But you know, for the average person, I think that either you know, hit Thor or hit Uniswap and you're good to go.
Yeah,
Solid.
I'm a big Thor rune fan, so that's why I was curious if that was on your radar.
Oh no, Thor's great.
Yeah.
Yeah, I've used Thor a lot. We did have a super chat here. What do you think of Say Network? It says it's the fastest blockchain with 20K in transactions. All I have to say to that is, you know, nothing against Say itself, but every project says they're the fastest with the most transactions, you know, and complete finality. So as you guys move, the things I personally like to look for, and everybody up here might have different perspectives on SEI, but for me specifically, it's, you know, I'm really looking at the leadership and the marketing behind these projects. What it's going to be, you know, the price action, if that's what you're there for, is primarily going to come from the speculation in a retail-driven market. So if we're anticipating a bull run here, I mean, you saw it with Solana. Solana is probably the prime example of what it looks like when retail gets the attention there, what can be driven when a community is built on top of that. And so, you know, I would be really paying attention, okay, who's behind the team? Who's leading that marketing? What's the development actually look like? And is there good products? Because if not, you can run into another product, ICP, for example, huge project, but the community is still very, very tight, very, very small, and doesn't have that application to community that you see on things like Cardano or Solana. So even though Cardano might be hard to build on, Charles Hoskinson as a leader, a lot of people relate him to like a Steve Jobs, and it drives a lot of community aspect and retail-driven audience to that network. So with Say, I don't know too much about it, but if they're claiming they're the fastest, I'm going to tell you right now, they're definitely not the fastest because there's someone that's being built today that will be the fastest again in 6 months or is already faster today. So it's kind of like one of those, you're in Georgia and you see Georgia's best chicken fingers. And it's like, well, then you go south and there's another one that says Georgia's best chicken fingers. And you're like, you know, where's this marketing line?
Well, let me give you bullish for it. All right. That was the bear take. Here's a little bit of a bullish take. And I don't have any exposure to this, but if I had to say, you know, why would I like it? It's a L1 out of the top 100. So it's not easy finding a L1 that isn't in the top 100. And this would be the number one reason I wouldn't hate if you wanted to get a little exposure. Circle has invested in it. And so Circle is behind it. So Circle is now going to have a monetary reason for it to perform well. But again, let me cool you down here with a little bit. You're coming in on a little spike. So if you look here, it was as low as under 10 cents right now. It's 20. Oh, that's only a 2x. All right. Yeah. I won't hate you if you come in, get a 2x. But I would expect, I'd do a little TA and see if maybe you can get in a little bit better entry. But if you're getting a L1 out of the top 100,
Yeah, and I want to say, you know, mine wasn't necessarily a bearish take. I just wanted to confirm, like, that's what I would look for. I know nothing about Say, haven't done the due diligence into that project just yet here. Next up, though, we have something that you touched on a little bit earlier with the Fed's decisions turning into a more dovish central bank in 2024. And it does look like research, guys. Traders expect the Fed to cut rates by 100 basis points next year, weakening the dollar and incentivizing risk-taking in crypto and traditional markets. Now, what I want you guys to just know a little bit about is historically, if we're following these markets, whenever the Feds do pivot, if there is a good amount of retail money in this and it still is a little bit correlated to the NASDAQ, there's actually a pretty big drawback instantly that's accumulated pretty heavily. So when we see them officially make the announcement, oh, we're switching off the dollar, that traditionally means we've already came out of that recession pretty hard, but it does follow, or either it's falling into one, or we see just, again, a pullback in those price actions. So this is something that I'm watching out for, because if they do decide to make that pivot, that's where I'm like, okay, I want to accumulate around that range and pick up around whenever they decide to do that. It could be at the end of the year, but right now, guys, traders are definitely expecting that. The stance will probably weigh on the dollar. A weaker greenback often incentivizes risk-taking in crypto. That one just read double take off the title here. But guys, you know, even with the de-dollarization and the whole aspect of the dollar is going to fail, I do not believe that is the route we're going to go. But we are printing endless money, and this is going to just be a more positive for Bitcoin overall in the crypto space, completely in general. And is why Vivek Ramaswamy coming out again. I know people are very controversial on this guy. They love him or you hate him. I'm on the side where I like almost everything that he says, but he believes that the U.S. government feels threatened by Bitcoin, and they 100% do. This is why they're enforcing sanctions. It's why they're enforcing regulations by enforcement. These aren't representatives. These are elected officials by the executive branch that were appointed by the executive administration, whether it's Gary Gensler or the CFTC. And they're pushing and looking for that full control over here. So he brought this up at a Republican debate. He also just brought it up, I believe, on Peter McCormick's podcast, and even RFK has touched on this as well. This is just more bullish. So even though regulation's coming in, guys, this is why I want Bitcoin. This is why I'm stacking Bitcoin. It's because I know that this is something that they don't necessarily have complete control over right now. There was decentralization on Bitcoin's network for a very long time. And even though the institutionalization's coming in, you know, this is why we're grabbing this up. You see foreign countries like Javier Milei, the new president of Argentina, wanting to completely dissolve the Federal Reserve banking system because it's so corrupted. Now, unfortunately, he's going from there to the US dollar, which arguably is the same exact mechanism set up, just not as greedy from politicians just yet. But central banks are scared of Bitcoin. Politicians, corrupt politicians, are scared of Bitcoin because it's transparent, it's open source, it holds people accountable. That is the purpose of this. And so seeing this is all extremely bullish in the narrative that even though Bitcoin might be a little bit like the mempools, there's things that we have to work on and protocol-wise that we need to incentivize the demonopolization of an industry. This is a decentralized, geographically asset that can be created anywhere. It's not like gold. Gold is based off location, right? Bitcoin can be mined from any country. It doesn't matter if you're in South America, Africa, or Russia. If you don't want to access funds through the IMF, the World Bank, or be indebted to BRICS and be indebted to these loan sharks that are the United States and China itself, you can break away with Bitcoin. And that is a huge benefit. And we're seeing it come out of Argentina. I
pulled up their inflation rate just real quick because we have a new number for October. It's different than September. It's gone up 142% now, up from 138%. So that is Argentina's inflation. So if you're wondering why he hates the central bank so much there, well, I think that number might have a little bit to do with it, folks.
It's not working for him, clearly.
And we had a really good conversation earlier. I don't know if you're allowed to touch on it, but with just the ethos of Arculus itself with the Guardian. So like, what does the Guardian represent? Is this what made you really want to create self-custody in the first place? What brought you to self-custody?
Yeah, I mean, self-sovereignty and security are extremely important. So where the Arculus name comes in, right? Arculus is the Roman god of safes and strongboxes. So that's where we came up with it. And then we created the Guardian to help keep you safe, right? And what he's supposed to represent is just that pillar of security that's going to stand between you and the outside world and keep your assets safe. But the ethos of the company overall is that self-sovereign, independent person that wants to take control of their destiny, take control of their funds, and interact with the world in the way they choose. And sometimes I discuss this with customers and they see crypto as like us or them in terms of fiat. It's right? Like you have assets, you should choose how to use them. And I completely agree. Like the dollar's not going away anytime soon. If you think that they are, I invite you to watch a video of the U.S. Marine Corps. And right, the dollar is not going away anytime soon.
Yeah. No, that's a good point. I mean, we have a lot of different ways. You know, there's a lot of demand out there. And I think people like to, obviously, specifically in this space where we've been looking at this market for a while, we can see the inflation problems for a while. We can see the dollar has been weakening, yet its stronghold around the world has been getting stronger. And I think that's to your point. We do have a very strong force behind the dollar, and we have a lot of different levers we can pull to call it regulate, call it manipulate the market, whatever you want to say. Like the U.S., the banks and the powers behind the U.S. dollar know how to maybe we'll call it manage the market very, very well. And they're just getting started as we go into 2024 and 2025. And so the things we're going to see, I believe, will create more demand for the dollar and give it a longer lifespan. Now, it may not hold its value as much as an asset like Bitcoin will over time, which I think will continually make the use case and the demand for Bitcoin go up. People will want hard assets, whether it's gold, whether it's real estate, whether it's Bitcoin. People will see and experience the inflation a little bit more firsthand. But I agree 100%. It's going to be a long time before we see the almighty dollar not being the primary medium of exchange around the world.
Real quick, how often do you think of Roman Empire? People are wondering.
I saw the chat scrolling. I think the Rise and Fall of the Roman Empire is an excellent book or series of books that everyone should read.
You think of Roman Empire more than once a week, though, right? just randomly. Like you think of a chariot,
Yeah,
you know,
he wears Arculus every day, so he's got to
Is
probably
the
care about
Guardian
it.
tattooed yet? That's
Yeah.
the question.
Yeah, but you can't see it.
Oh, okay.
Yeah.
Nice.
He's guarding what maybe
All right,
SBF
no, the
needs
chat's
guarded.
gonna get wild. Chat's gonna get wild.
Moving on,
Cosmos founder,
all right,
guys.
all right.
Jay Kwan.
Cosmos,
All right,
Adam. all
stirs up controversy with Adam. There's a lot of Adams today, but
Yeah.
Adam won fork proposal amid inflation cap dispute, guys. So Cosmos founder Jay Kwan just faces some backlash for considering a blockchain fork following the community approval of pegging Adam's maximum inflation rate to 10%.
Yeah, here we go.
Yeah. What are your thoughts on that? I saw the face turn a little bit.
Yeah, no, I don't know. I don't trade Cosmos that often. It's a very interesting from a technical perspective. You can think of it like the blockchain of blockchains and Tendermint that it runs on is really interesting. But yeah, I was surprised that there was any sort of like forced fixing of a rate relative to just letting it run. So I was surprised when this came out. Very
because
surprised.
this is a 12 months old coin. You know, when did this launch? Was it 14?
Cosmos has been around a while.
Yeah,
It's been a
20,
minute. It's been a minute because
18 or
the
19,
SDK
I'm pretty
has
sure.
like everything
Okay.
built off top of it now. Like
Yep.
injectives on SDK, which I like and use all the time.
Oh, okay. Yeah, 19. Okay. A little bit newer.
It's been a minute. But the CEO said right here, I believe this is coming from Quan. The vision behind this Atom 1 fork is to be an alternative minimal fork of Gaia. Cosmos Hub for running alongside Gaia to prepare for all contingencies and also to operate as a political party base in relation to Gaia. We strive to complement the broader Cosmos ecosystem while introducing innovative solutions and perspectives. Our goals are not to just resolve current challenges, but are also to set a new precedent for adaptive and responsive self-organization in the multi-chain, multi-token universe that we call Cosmos. You know, my thoughts on, there's a lot to Cosmos I like, and then there's a decent amount that I'm kind of like, okay, what are we doing here? Because I really like Injective. I love the interoperability that allows us to function with. There's only one critique, and that's can we slow down on all the names? From Tendermint, SDK, Atom, Cosmos. There's a lot of tokens there, but I'd have to agree. It's kind of like, are we enforcing? Should it be a free market? What are your thoughts there? But Blast TVL guys, this is something that's been moving like crazy.
This is interesting to me.
Yeah, it hits 390 million. I know TJ, you have a lot to say about this, but what are your thoughts on Blast here?
It's a little bizarre to me. I mean, as far as I know, this is a one-way bridge, right? Like there's no bridge back yet, off of this layer 2.
So you can get on, but you can't get off.
Right. So there's tons of money that's gone into this ecosystem already. This is the one that's associated with Blur, correct?
Yeah,
yeah.
I believe so.
And so this is one of the co-founders of Blur. This is a new liquidity, play. It's not necessarily, as far as I can see, anything that doesn't already exist as far as what a layer 2 is doing or can do. So it's a lot of blind hope, I guess you could say. A lot of people hoping for a positive result from people that have gotten it in the past. I do know there was probably some airdrop tokens and a lot of hype around it built up. So when you're dealing with NFTs, hype is the name of the game a lot of times. So if you can maintain that hype, maybe there's something there. If it's strong marketing and things like that, maybe. I'm not as interested. I was hesitant to put anything over to base just because there was only a one way until you could figure it out. But you have a pretty good amount of confidence that whatever Coinbase is doing, there will follow through with. And to me, when you're getting involved with big public companies like Coinbase, there's a little bit more trust there with things like this. Personally, I wouldn't be doing it. But hey, whatever, go for it.
Pac-Man doesn't post too publicly, but he does look like an anime character. This is just a little fun. This is the founder of Blur and founder of Blast. It's this guy right here.
It kind of looks like the guy from Hunger Games.
He's a Teal Fellowship winner. He's
no.
also MIT dropout, I believe.
So a smart guy.
Smart guy.
He's had a lot of success in the past, but again, to me, you're betting a lot on this. There's really not a lot to go on, and we're seeing that. Shockingly around the space right now. And I don't know if that means we're at a local top. A lot of times when you see people throwing money around like this, it might be, hey, we're due for a little bit of a retest, a flush out, kind of like what Kelly was talking about. Maybe a little bit of a pullback, to 30 or 32 or even 28 or some of those numbers, which would get a lot of people a lot less excited about just throwing ETH all over the place. I mean, I saw, like BitLord, apparently a ton of people sent him a bunch of money, and now he's taking a mental health break and was spotted on a new yacht. And it's like, I just don't know. I don't understand the whole just blind sending your money and, hoping for an overnight pump. We're seeing meme coins pop off and stuff like that right now. It can be fun at certain times, but when it starts to happen a lot, that's usually when I like to take a pause and say, hey, are we due for a pullback right here? Where is this frothiness coming from? Or, and then sometimes we'll just pump right through it. But, when I see things like what's happening with Blast, what's happening with some of the meme coins that are really they're just for fun. And they're really, and again, they're more than just for fun. They're really for whales to manipulate you into being their exit liquidity so they can get more ETH and get prepared for what's coming up. So keep that in mind. I'm not saying you can't have some fun with it, but when, Blast, to me, I'm not trying to blast it, but it just doesn't.
I see what you did there.
It's nothing really all that special. It's things we've seen in the space before with successful names behind it. And I think a lot of people were aping in because Paradigm was behind it.
It's Teal backed is also the guy he's a former Teal member or something.
But I believe they've now come out and said like, actually we're not behind this.
Oh,
so,
really?
I mean, that's what I saw, I think Sunday. Now, again, this is unconfirmed. this is according to Twitter or X, things that I've seen on the internet. They're somewhat backing away. And so anytime you see some of that stuff start to happen, I would just say proceed with extreme caution is what I'll say.
Yeah, and that leads us to kind of the last topic here today, guys. So first, make sure you guys go down below, smash that like button if you appreciate, Adam and all the knowledge he's been able to drop today, all the alpha on the insights of the industry. Also, there is the 20% off coupon for Cyber Monday for Discover Crypto 20. You can use that code in the description below, guys, in the bio to get yourself a beautiful Arculus hardware wallet for 20% off here, so you can store your crypto safely. But guys, this is huge news. This is USDC partnering with SBI Holdings, which a lot of you XRP lovers out there. I'm an XRP holder myself. SBI Holdings, massive Asian company. This is like one of the things that we hold on to with SBI's holdings from the XRP community. This is huge adoption for just Southeast Asia in general and can bring a lot more adoption to USDC, and we could see more influx from institutional buyers and adopters with stablecoins now in Southeast Asia as well as Japan. So, this is good for just remittances in general and the adoption behind that. This could be another moving factor into 2024 where we see, again, we were talking about the adoption curve, right? You used to see USDC and USDT kind of grow against each other or grow with each other. USDC has been on a massive decline, and Circle has been making strides in terms of that adoption, trying to, I don't know if necessarily catch that base, but bring adoption. And something I forgot we didn't even talk about today, which I'm just going to brush over really quickly, is the ADFW. This is from ADGM. This is going to be Abu Dhabi's finance week. And this is put on by the regulators that just passed that exchange, M2, that got the licensing from it. This is also Richard Tang. Richard Tang's the CEO of Binance. He actually developed the entire regulatory framework and oversaw it for like 5 years, which is huge because this is the industry that is bringing everybody together to talk about regulations. Of course, Circle is going to be there. There's a huge list of people. I know Circle is going to be there. I can't pull up all the speakers because there's like literally 100 of them. You could see Ray Dalio was there from, of course, Bridgewater. You have massive speakers here. Jamie Dimon will be speaking from there he is right there. There's Jeremy right there from Circle. So they're in these groups. They're talking this week. In fact, this is today. This starts today in Abu Dhabi. And this is a massive financial hub. So I think we're going to see more connections, more adoption from institutional investors coming into these markets as regulations start clearing up, because they know they can access this Middle Eastern market now, which is massive. We're talking hundreds of billions, if not trillions, in oil money that exists within this region. These are huge talks and a huge step in that right direction, and leads to, obviously, the institutional investors flock to Ethereum. Holds see notable uptick amid ETF hype. And this just comes back to more guys, institutions, they know. They're adopting, they're filing for ETFs now. BlackRock's not too far behind on the Bitcoin one. And my thought process behind this goes, okay, BlackRock has had 99.9% of their ETFs passed since 2014. They only had one denied. And I believe it's like some outrageous number, like 500 plus ETFs, minus the one that wasn't approved. So the fact that they're now approaching an altcoin that has completely separate functionality from Bitcoin, from proof of work to proof of stake. And obviously, Charles Hoskinson's been slamming for the centralization issues. If they are approaching an ETF, it shows that they know institutional interest is here. They know they're lobbying and putting the right policies up to get access to these financial products. We're seeing massive investor development come out of these regions. You guys got any last thoughts on all that?
No, I mean, I agree with what you're saying there. And I do believe they're already setting the stage for if there is a legal battle that needs to come, they're already prepped and ready, basically they've already referenced the fact that there's a Ethereum futures ETF saying that look, if you can approve that, then you can approve spot, and they're willing to go down the list of and kind of overcome the objections that the SEC might put in front of them. So I can see the path is getting cleared for both Bitcoin and Ethereum spot ETFs. The market wants it, and it has wanted it regardless what they may have said on the media for the past few years. There's demand there for it. Like I said, there's all these money sitting on the sidelines right now that wants to get out of cash. They know, 2024 is going to be a year when rates start coming down. They know the printers are turning back on around the world. It's been great to be in cash for the last couple of years. It's going to be great to get out of cash for the next probably 4 years after this, or definitely the next 2. So I'm not surprised at all to see the stage being set the way it has been. And I really do think, Bitcoin ETF and then a spot Ethereum ETF following it, it will be a really strong catalyst for all the markets. Obviously, we've got the halving going as well. We've got potential rate cuts, which you already covered. So it really is creating a perfect storm for Bitcoin and Ethereum. But what do you think? I mean, you deal with a lot of these people around the world. I mean, are you seeing this demand happen globally?
We are. And I think that they fundamentally see, from a holding class, they see ETH and Bitcoin a little differently.
Sure.
Right. They both see huge stores of value, but, ETH really is an amazing public computer that can do amazing things, especially when you roll it up to an L2. So I think they righteously see it, in 2 different buckets, and see, a lot more incremental actually kind of usage on ETH. Like you can just literally do more things with ETH, and it's a viable public system to trade and do things on.
Let me ask you this. I've got a theory on, basically if they both get approved, piling into Bitcoin and then going short on ETH as a hedge for institutions, to be long and short crypto, so to speak, at the same time. Like you said, very different buckets, one more like a commodity, another one more like a SaaS product. But could you see that scenario playing out where you go, as a institution, long Bitcoin, short ETH, and be hedged?
Yeah, I think if you wanted to hedge, I think they'll loosely correlate. I don't think they'll totally correlate, but I do think if both go up, both will go up and both will go down if the market goes down. So I think that's a reasonable play. Yeah, unless you want to do some weird synthetic options thing or something to kind of hedge that way, but it could be very interesting.
Or they could do all 3. They love their synthetic options. Like things like synthetics and all that other stuff that could come to Ethereum. It could give you a lot of different financial tools, I guess, so to speak, digitally.
Yeah, and I want to give chat an opportunity as we wrap up here, just for a few questions. If you guys have any for Adam, I know there was a ton coming through this series. A little bit longer of an episode today because, of course, there is 4 of us. And there's just so many awesome questions we can ask, which, by the way, guys, we will also be doing multiple interviews. You'll be on multiple shows here with us at Discover Crypto. So if you guys have any questions or concerns or just want to know more about self-custody, I will be sitting down one-on-one and going through a lot of these key questions for you guys, just to prepare yourselves not only for what you need to buy as a Christmas present for your family, but more importantly, just for self-custody moving to 2024. There was one right here.
I'll answer that because I got some thoughts. Will Richard Hart be indicted? If so, how will it affect Pulse Chain development? I don't know about the price development. Yeah, he's arrested. It's going to be 20% to the downside probably. Then it'll probably spike because there'll be a deal. Here's what I think is going to happen to Richard Hart. I think Richard Hart, he has 2 options. Jail time or just slowly negotiate his way into a high enough price tag where they let him go. CZ just gave away $4.3 billion. I don't think Richard Hart has $4.3 billion right now. I think it's possible he can get in the ballpark in a year and a half from now, depending on what Hex does, depending on what Bitcoin does, depending on what the broader economy does. I think this is an uneducated guess. I think he's waiting for crypto to get a little bit higher, and then he can give him a heftier price tag and say, 300 million, let me walk. Deal? Capiche? Okay. I think he's just waiting until he gets the 300 million or whatever that number is.
That's an interesting outlook.
Yeah, because he wants to bribe his way out of jail.
It could be. That's why he's on the run.
The SEC is open to bribes. We just saw that with CZ.
No. Our government's not.
Or corrupted. DOJ. I'm sorry. DOJ is open to bribes.
Yeah, I think they all are.
Yeah.
Sorry, was there something in our throat here, or just political corruption?
Yeah, I think I'll be interested to see what happens. I think Richard has been prepared for this for quite some time. He made himself very intentionally hard to find, but I will say he's probably not the first to try this approach. He will be found eventually, and I think we'll have to wait and see what happens. I don't think he'll be able to get out of too much. How will it affect Hex and Pulse Chain? I don't think it'll be good. Richard Hart is Hex and Pulse Chain in a lot of different ways. I would say be careful with any project that has a cult-like leader following where it all revolves around that one person. And then if that one person was to get into any trouble, it will have a dramatic effect on the price. Richard, love him or hate him, he's definitely a very controversial figure in the space. You guys know where I stand on Hex in a lot of different ways. So, I think it will eventually catch up with him.
Smart guy, very smart guy, knows Bitcoin very well.
I've never met him in person. I know people here have, but I'm definitely like against Hospice Network. I think it's when you have to sacrifice your tokens, like it's really pushing cult-like behavior.
Yeah.
I personally just stay away. But if you want to go, gamble on slot machine type stuff, that's up to you.
He did install a bidet in his mother's home. He came to visited the studio shortly thereafter. I remember it was like, where's your mom live? I'm not telling you that.
Yeah, then
got real serious. Like, oh, okay. Yeah, he's serious about his OPSEC.
Yeah, well, I think he knew this might have been his last visit to the United States.
Oh, Gary Gensler was listening. I had a little lapel on my suspenders there.
You're wired up. You're wired up.
We saw The Weeknd together, actually, the singer.
Well, let me ask this. This is an interesting question. Do you think USDC is going to bring USDT into a lawsuit in order to gain market share before ETF's approval? So a lot of FUD around Tether. It always has been as long as I've been in the space. Do you think there's any angle there for Circle to kind of take that, a regulatory lawsuit approach against Tether?
No, I don't think they're going to sue them. But what people may not know in the space, right, is USDT and USDC at the industrial level are used very differently, right? So like USDT is essentially an inter-exchange liquidity pool. Like that's the vast usage for USDT. Regulated entities, generally speaking, knock on wood, don't touch USDT or won't, at least in the US and a lot of EU countries. So USDC is hyper regulated, hyper transparent about what they do. So it has a higher bar. So that is the payments use cases, banking use cases, retail use cases, all of those things. So while exchanges certainly use it, especially Asian exchanges favor USDT for various reasons.
Let me ask you a question, and I understand if you can't answer this. You really had to choose one. Which is more likely to survive 10 years?
USDC.
Okay.
Because USDT, in my opinion, just Adam's opinion, not the company's opinion, USDT can't survive government scrutiny, US government scrutiny.
Right.
But you look at it, it's going to be kind of the slow push out as the approach. Because that's what I always look at is like there's a lot of FUD around it. But again, you have to realize who's the ones making these regulations, pass these regulations, and who's launching these financial products. It's like if we're having these discussions, they're having these discussions. So they know if they go too aggressive on this, they're not only going to wreck investors, they could really hurt an industry that has been established and all the institutions paying their pockets for these politicians. Like that's going to hurt their company and their broadline balance sheet because so they just have to understand that. So that's where I'm like, I think it will still slowly be pushed out. USDC, it's very clear with the path towards regulation that we're approaching. We're going after the on-ramps, off-ramps. I'm where I work with the FBBA, which helped pass the anti-CBDC bills in Florida. And it's like even there's this huge talk over like CBDC is bad. We need to get rid of these. And people are completely disregarding the fact that stable coins, just because they're boring doesn't mean that they don't matter. It's like this is where they're going to regulate those on-ramps and off-ramps. And it could might as well be a CBDC with how much regulation. It just will be a CBDC with a few extra steps. So, it's a perspective you need to watch and a narrative we need to follow.
Well, yeah. And if I heard what you're saying, basically to the question of will they use legal force to try to push them out, they won't have to, right? I mean, Tether exists as it does today and solves its problem, but USDC coming through the financial sector, like you said, through payments, through banks, these are the people facilitating the large majority of the transactions all around the world already. They're not going to do anything to mess with their business. They're not going to do anything that could give them potential risk against the US government. Maybe some of these early upstart exchanges have and would and use Tether in that context. But even as the new exchanges start coming in that are going to be highly regulated, specifically if they're publicly traded companies, they have to deal with the U.S. regulatory bodies all around the world. And again, we're not just in the U.S. The U.S. financial arm reaches far and wide. And as that continues to happen, I think, again, and this is why I always say, when you think of Circle, think of Goldman Sachs, think of BNY Mellon, because that is where the roots are. That is where the foundation of these payment processors come from, the oldest banks in the U.S. They know how to play this game, and they may have been a little, we might feel like they've been late. They probably feel like they timed it just right. They were waiting for the market to get to a size that makes sense for them to get involved. We've actually gotten there now, and they're ready to get involved. They're ready to take charge and make the U.S. presence known.
And you're not going to see that. You're not going to know about BNY Mellon, likes USDC, doesn't like USDT. You're not going to know any of that. You're just going to know when you go to Starbucks, it says USDC and it doesn't say USDT.
Yeah.
That's how it manifests for you at home.
Yeah.
I actually think it's going to be just pay. Like that's
won't
like
even
one
know
of the
that.
products we're working on, right? It's just pay. Like right, it's all behind the scenes. Like you don't know how your modem works. You don't know how your email works.
That's
you
what
just
we need.
tap and it goes.
Just like it does right now. You don't know what's happening when you tap your whatever it is, Bank of America, American Express, whatever that card is. You don't know like what's happening at the bank, what's happening between the banks, what's happening in the between the bank the payment processor, the card, bank, all the way through, and that's what we need. We need that user experience, and we're getting there through the help of companies like Arculus, through a lot of these big exchanges getting to the size that they are, through point of service Verifone and some of those point of purchase systems getting updated with the technology it needs. Those are all the infrastructure things that have been happening slowly throughout this past bear market. I mean, you hear Jack Mallers from Strike talk about some of that stuff, and it sounds kind of boring, but like the infrastructure being laid is what we need for each cycle, having bigger and bigger bull runs for retail to actually have the experience that they're imagining when you're hearing all of these great ideas and startups, and we can do this with GameFi, we can do this with play to earn or move to earn or all these different things. Like conceptually, yes, we can. They're great. Like the technology will allow us to do some incredible things, but it's not going to happen as quickly as we think it is because of the technology, right?
Mm-hmm.
We have to have these infrastructure properties in place. We have to have the user adoption and understanding things in place, and that's all been building over the last 10, 12 years, but really hypercharged in the last, I'd say 4 to 6. And we're going to continue to see that growth curve once the incentives are there, which are clear, then the innovation and the development and the technology follows, which is, again, you hear Charles talk about it a lot. A lot of the founding fathers in this space talk about, when the incentives align, the technology catches up, then the users come, and all of these things come together into a beautiful new market. And I think that's what we're going to experience, with the perfect storm of the economy, prices going up. Like I really do think 2024, 2025, we will see the end of diminishing returns for the market, see a really explosive bull run that could, without FTX in the way this time, it's going to be a lot more fun next time.
Yeah, so. And it comes, I have one last thing to say here, and then I want to definitely wrap it up with your thoughts as well. Easy if you have anything too. But Mr. Techno Goody said, when you say scrutiny, do you mean actual standard or just political favor? So this is something we're actually going to be working on at Discover Crypto. I've been working with a lot of Web3 policies. We were just with DeSantis' team a few weeks back. And while we can't do everything as, an individual or group, we can still make the right approach to help sit down with regulators and still actually try to advocate for change and be that second ear. Because right now, all these politicians, yes, political favor does indeed happen all the time because it's an indirect bias, because all they are hearing is the people that are coming in and teaching about crypto and regulation are the lobbyists and the institutions launching financial products. So they're not thinking like a retailer. They're not thinking for a retailer. They're thinking for an institution. And so we'll be sitting down with Capitol Hill. You'll see me and DZ and a lot of these interviews actually ramp up over the next year, where we're sitting down with not only our regulators, but big names, governors, congressmen, presidential candidates, as you saw just a few weeks back, and helping actually write and push and pass those bills that might help us and support us in those ways. So what I meant by political favor was you might get someone, think about it, like these politicians, they invest too. They might be holding XRP, or they might be holding Cardano, and they might hate Ethereum. So of course they're going to, maybe they see a bill that benefits them more. You don't know what's happening on the back end. So that's what we're doing to hopefully make those strides and make the industry a better place for retail as a whole. But Adam, it's been an absolute pleasure having you on today. If there's like anything you just want to let the audience know as we move into another bull run, things that you've seen in the past that, maybe new people should just pay attention to and not make the same mistakes as previous runs. What should they watch out for? And what can you leave them with, just for the rest of the crypto bull run?
Sure. So first thing is your keys are crypto, whether it's Arculus somewhere else. Keep your sats safe, right? So keep your keys in your pocket, keep your crypto to be yours. I think that's the most important message. The second is, I would say, on these bull runs, you got a dollar cost average because you might be up today, down tomorrow, and way up the next day. So dollar cost average, just like you would equities. And finally, with that, the adoption is here. And even though it's a little slower in the States, mainly because of regulation, you can see it in Europe. You can really see it in Asia. Like, it's not a debate whether this is coming. It's just when it's coming and how. And so, spread your risk, get in, but the bottom line, get in the game, stay in the game.
There you go. I like that.
All right, that's all we got. And go ahead and invest in that like button as well. DCA into the likes. That's all I got. Josh,
I was waiting for the
DJ.
infamous DZ outro.
Yeah, no, well, I did notice a question earlier asking if the good doctor will be on the basement today. And yes, he will be on basement later on today.
Ooh, you can get crazy with your conspiracy theories on that show.
But yeah,
See what I'm
appreciate
allowed to
all
say.
you guys, and we'll see you tomorrow.
Later, guys.